Hello everyone, this is Osama Rizvi from Primary Vision Network and welcome to another episode of Monday Mac Review. This would be the last episode of this Monday Mac Review for this year, and then from the new year we start again. So as I discussed in the last episode, I would want to cover two remaining things. One was a recap of 2022 and also what are the risk factors that we can look into as moving forward. Let's jump right into it. As you can see on your screens, there was a very good report by the Economist Intelligence Unit recently, and they looked at different risks across the world. And the report has different scenarios, and one of the scenarios with high impact and high volatility renders different risks sprawled across in different various domains and spheres. So you can see there is the risk of deteriorating ties between China and the West. They haven't included this the exact trade war that is going on, but I believe that trade war would resurface at some point. Secondly, monetary tightening, as we discussed in the last show, most of the countries, more than 50 countries across the world, are looking forward to increase interest rates. The policy course would stay its course. That is going to create a lot of problems on the financial and economic front. Then COVID-19 has re-emerged in China, even in Pakistan, in different parts of the world, in India. So there is what was a tail risk now has become a risk, which everyone can see. That COVID-19, we might see a resurgence of COVID-19, and that would change everything, that all the estimates, all the forecasts for the next year. Cold winter in Europe, so you can relate this directly to the energy crisis happening in Europe and the fact that they have retained their inventories up to 80-90%, but that is only when there is a certain amount of temperature. We all know that when temperatures went down in Germany, even for 10-14 days, the energy consumption went up. And if that prolongs, there would be the energy crisis, which we are still not out of, but that would only exacerbate. War in Ukraine, unfortunately, continues to unfold. Inflation, high inflation, we have discussed this multiple times, and high inflation leads to social unrest. The weather conditions will also affect not only the agriculture sector but also famines. It can induce famines in different parts of the world. As given the precarious position of the global food security, we believe this tends to be a very imminent threat moving into 2023. So such threats can be anticipated when we walk into 2023. But one of the very interesting facts of all of these was that over 500 million population people live in countries that rely on Ukrainian and Russian wheat. Because we know that both of the countries are a huge player in global food supply chains. And you can see this on the chart here, that there are some countries who depend upon them as more than 71 to 100%. Mostly fall between 41 to 70% in that, and those are mostly in the African region of the world or Middle East, and that is where Southeast Asian countries, that is where things start to become more dangerous, and that these are also the region that has a lot of people who are food insecure, who have elevated levels of poverty, and this would continue to be a threat, not only in 2023, I believe, but for the next 2 or 3 years. Moving forward, coming to central banks, this is something, if you look at what is happening, there was a recent somewhat positive figures coming from a US CPI. However, to think that it was going to induce a pivot in Fed's policy, that is wishful thinking, I would believe. We discussed various outlooks of international banks and hedge funds, and most of them were quite crazy, if you ask me. I do not believe that we're going to see a pivot or a change in policy or a fall in interest rates of the US Federal Reserve Bank of America unless we hit 5.5% or 6%. Now, that would certainly take the unemployment level to 4.5 or 4.7, and that is going to induce a very serious recession. Hence, I I'm inclined towards this idea that we will continue to see this global economic slowdown. Food heat inflation. That food prices continue to remain at elevated levels. So if you see the UN FAO's food price index, it has fallen a little bit, but that's the point. This is even true of inflation. This is even true for other economic data. So things might be falling, but that is not the case. That they are falling when you compare them to recent highs. If you compare them to previous 5-year moving averages or weighted averages, they are still at a highly elevated level, and that they are increasing, but only the speed of increase has slowed down. So there is a difference between that. You see, the most of the world here is in red, which means that food price inflation is beyond 20-25%. That induces a lot of challenges, especially for countries like Pakistan, like Latin American countries, global South in a sense, because they're facing a lot of budgetary crisis. Remember, global monetary tightening produces a stronger dollar that increases the risk, the cost of debt servicing for these countries. Pakistan right now is on the verge of facing a currency crisis. Our reserves are down, which are at a level less than to cover 1 month of imports. So that is not an easy situation. And if in this situation, due to the worsening climate, global food security, geopolitical situation, food prices increase, that creates a lot of issues. So that coming towards the how 2022 was, you can see this beautiful chart by World Bank, and we saw that most of the GDP forecasts could not be met. Most of the estimates, even if it is oil demand, even if it's global purchaser managers index, even if it is global growth in GDP, most of them were downturned. They were reduced because uncertainties continued to sprawl across the year. Progress in poverty was also a very serious thing, and this was one of the second worst year, 2022, in terms of poverty and progress. So it was estimated that by 2030, 3% of the global population would be under severe poverty. But even in this year, because of the recent events happening in this year particularly, it is estimated now 7% will still be in poverty by that date, which is quite more than what was expected before. Around 685 million people were added into the poverty line because of the recent events, which is, as I continue to say, so policy lever affect different people in different intensities. So this is something not good for the low middle income countries. Debt crisis is worsening across the world. I just told you an example about Pakistan. 60% of the world countries are in debt distress levels. That speaks a lot, and most of this debt is held by private creditors. Hence, the interest rates are really high. And finally, once again, in 2022, there was a sharp rise in food inflation observed across the world. Most of them, 90% of the cases, more than 5%. And if we talk about the energy crisis, just before we step into the market sentiment tracker, 733 million people in this world still do not have electricity up until 2022. And that speaks a lot about energy transitions. That speaks a lot about the weaning off fossil fuels, coal, natural gas, and whether we are at that juncture that we can afford of doing this or not. But this is something that we will discuss in detail. I would like to discuss this in detail moving forward. Finally, the market sentiment tracker. So for the year, when I started doing it for a few months, you can see I've tried to accumulate all the factors into one chart. You see by the end of the year that the recessionary sides continues to outweigh by a huge amount of news items and sentiment centering across the recessionary cycle, recessionary part. Whereas the geopolitical risk factor or bullish factors, there were many points like Taiwan issue especially, but it somehow somewhere sort of fizzled out. It remains a tail risk though, but we see the whole orientation of the year was more tilted towards the recessionary side. Hence, we have seen markets losing value. Hence, we've seen sell-offs in different global markets. We've seen a huge sell-off in oil markets. And I believe that these sell-offs will only exacerbate before they get better. I mean, things will get worse before they get better. So that is all from our side today. We wish you all a very happy new year and looking forward to see you in 2023. Thank you so much.